Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for September 17, 2022. As usual, before we start, here's our disclaimer. You can read this. Well, we're going to go through and just talk about the market environment. We don't have any stocks in the portfolio right now, and we don't have any stocks in the ready list anymore, so it's going to be a little bit of a shorter video. So just getting right into it, we've moved our stock environment indicator to red, and we have a maximum exposure of about 10%. The whole market has deteriorated over the last week. The general trend went back into a correction or a downtrend. The market's basically falling apart, and the leading stocks are just not acting very well. Sometimes in the indexes might be acting poorly, but leading stocks might be acting really, really well. And we had a little period a few weeks ago. It looked like we might have a nice little run, but it actually didn't end up working out. And most of these are now just not outright failing out of bases, but they, breakouts just aren't working. There's spikes up, and then, the institutions are actually selling into basically all these rallies. So we might get a pop on a stock, basically retail buying, and the institutions sell into it. So really not any progress for the most part for stocks, and most of them are just heading down. So we're always dealing with leading stocks, the ones that are actually near or at all-time highs. So that's where we are. Unfortunately, it's been the way it has been all year. But we continue to look for the best stocks for when the time will change, and it will change. We just don't know when it's going to be. But we will be ready to actually get some good exposure back into the market when that happens. So let's go ahead and just take a look at some of the stocks on our watch list. Give me 1 second here. Okay, so the first one is Lantheus. This one, if you've been with us for a while, it's been on our list for on and off for quite a while. And you can see, look at the relative strength line, just heading, basically nice uptrend. It's outperforming basically almost all stocks with a 99 out of 99 rating. But you can see when it's been trying to break out at times. Here we had a nice break to new highs. Immediately it was sold into another run up to about the same price, and it's come back. And it looks like it's getting supported at its 50-day, which is this red line. So, and we did have some high volume though. It was a little bit of a warning sign, but it did get support. So it's just really just not ready to go. And this is one of the best stocks in the market, great fundamentals, great technicals, but it's being, likely just held back by a poor market. So we'll continue to watch. Ideally, this will form a little bit more of a base. We had a nice little base here, even though it was pretty short, that formed, and then it broke out of here. Now we're just kind of almost like a base on a base. You can see if we draw a line over here, you can see this is kind of the top of the base, and now we're just coming back down to the top of that previous base. So, but a little bit on the short side. So we'll continue to watch that. I do want to say that most of the stocks on our list here are biotechs. Those seem to be the leaders. So the next one, this is actually the medical systems, but we're definitely in the medical area. Now this one just appeared on our list, and it's actually doing really, really well. Let's take a look at a weekly chart here. So it's come up. It had a big decline in the past. It's come back up. Actually, let's look at a monthly chart. So, okay, it was a IPO from 2017. It crashed during, of course, like most stocks in 2020, and came ripping back up into new highs. So there's something going on here, which is great. So we're going to be watching it. Now, it's a very, very small cap. It's almost like a micro cap. It's just $245 million stock, just 16 million shares. So this one could move, pretty quickly either way. If a big seller comes in, this will come down pretty quickly. But so far, we're just seeing, it's coming up to its highs here. So it's looking pretty good. Now, there's no buy spot, so we don't have it on the ready list. It's just kind of came up, came down, and then came straight back up here. So we'll see. We'll see if it can form some kind of a base, or if it will quiet down and give us, like you can see here, there was a nice little, even though it was under the 50-day, you can see how look how the 50-day was resistance. It couldn't get past the 50 for week after week after week. Then it finally broke, came back up, back to the 50, couldn't hold it. So you can see for whatever reason, nobody wanted the stock to get above there. But once it did, on pretty decent volume here, then higher, then that was it. It was able to break out and keep going. Then it had a nice spike up into earnings. So, and you can actually see here in the fundamentals, the stock, they've basically been losing money since 2015. And then 2021, we actually got a little bit of a positive, 25 cents annual earnings. And then we jumped up to $1.40 this year. So definitely something's going on. They develop radiation therapy devices for the treatment of non-melanoma skin cancer. So they must have some good new products that are working. So we're going to keep an eye on that one. The next one is Privia Healthcare. It's PRVA. And this is a cloud-based platform that combines medical groups to improve patient experience. Again, look at here's the S&P. You can see how it is been coming down, had that rally. Now we're starting to come down again. Look at this stock's doing. It's going the opposite direction. In fact, during this whole drop in the S&P back in April, May, and June, this stock was actually forming a base, and then it started to head up while this was making a new low here. This was just about to make a new high, and then it actually broke out from there, went up 20%, and then it's making a nice move. So definitely, again, this one's looks like next year it'll go profitable again. It looks like 2022 is a poor year, but very strong fundamentals, and earnings and sales are strong here. So it's another one we want to watch. It's definitely outperforming the general market. So the next one is PTC Therapeutics, PTCT. This one's been on our list. I don't know if we traded this. But this is a biotech stock, and you can see here we had some really nice. We had a cup that formed, tried to break out, failed, really took a dive. There was a lot of selling going on here. Then there must have been some news here. Shot back up, almost made up the whole problems before. You can see whenever the stock would get up to about 44.5 to 45, it really couldn't get past that. Sellers came down. Now here we started doing a lot of tight trading on lower volume, showing that the sellers just weren't looking to push it down, and then it finally broke out, and we're forming another little flat base kind of a pattern here. So we're watching this. It's holding up pretty well during the whole market correction, and you can see the RS lines heading up, and we have an RS rating of 98. Let's take a quick look at the weekly on this one. It doesn't look very exciting in the weekly. Hasn't really done much. And then if we go to a monthly, the one thing we always look for is, does the stock have the potential to make a move? And here you can see that it does. It's actually had quite a few times. It's gone from about 20 up to 80. It really crashed in 2015, and it's gone from $5-6 up to 60, and then a really quick move here, almost 100%. Yeah, it is 100%. So this one's capable of moving pretty quickly when conditions are right. So we're going to be watching this one. Next one is in iRhythm Technologies, IRTC. Again, so far all these have RS ratings of 99 or 98. We have a few that are still in the 90s, but at the lower part of the 90s. So we're always looking for the strongest stocks. Now this one, it's a little choppy trading. You see it just hasn't really been able to get out of this whole range. So it's not really one of my most exciting stocks we have here. But we'll continue to watch it. I actually had to have just a heart check. Nothing wrong with my heart. But they put me on a little monitor, and it was made by this company. And I had other ones in the past. I just had this, just as general checkups. And they were really impossible to use. You had to use your cell phone, and it didn't stick very well, and you just didn't have, you had a lot of problems with it. This one is phenomenal, just no problems at all. It stuck, and you just mail it back when you're done after a week of wearing it. So the technology has been really, really great. So kind of gave me a little extra look into what this company is doing. But again, we're back up at this 150 to 155 range that's caused problems in the past. If I draw a line here, yeah, you can see whenever it's got above about 153, the sellers are just are waiting for it to sell into that rally. So we'll continue to watch this. It's looking pretty good. I wouldn't say there really isn't much in terms of earnings, but their sales are increasing, so that's a good sign. It's just not a clear pattern yet, and so we're going to continue to watch this. If it breaks down, we'll take it off the list, and if it does continue to tighten up or form a nice pattern, we might be there to pick it up. Next one is Devon Energy. Ticker's DVN. Sorry, I goofed that one there. Okay, so we're starting to see a little bit more energy stocks reappear. They had a really nice run in the early part of this year. There was a pretty substantial correction. This one came down 38%, but then they came right back, and this one's forming a little cup with handle here. And so we're kind of waiting. Our buy zone is at 71.70, so we're not waiting for it to. Let's see. So what we're doing, we're actually trying to buy it when it breaks above most of this area here. Now, we had one day it popped above, but that's our buy zone when it comes through here. Not waiting for it to actually clear the handle here, which is at 75.27. So, but it did make a new low in the handle. The handle's getting a little bit, 13% decline. It's getting a little up there. If it comes down a little too much more, then it'll probably negate this pattern, and we'll just take it off our list. One final thing here, the oil and gas industry group is 4 out of 197. So that's been, you can see how strong that's been. Next one is Make My Trip. This one is ticker's MMYT. Again, you can notice that most of these stocks are heading up at the end of their run, and they're near all-time highs or new highs. There's the weekly chart. Let's look at the monthly too. Let's back it up. Okay, so this has been around for about 10 years, but really hasn't done much. You can just see it's a nice trader. You might get a few months out of it and then back down. Really, this stock, if it can actually clear about 42 to 43, this thing might just take off, and you'll see a nice move up to the 80s or beyond. But for whatever reason, hasn't had any impetus to break out. So let's go back to so we have here a really big 213-day cup with handle that's formed. And it's not a bad looking chart. And here's our handle, but we tried to break out a few days on Thursday, and we came straight back in, which is typical of this market. The breakouts are just sold into. So the handle's about 9%. That's reasonable. That's nothing wrong there. And we'll see. Maybe we'll get some more shakeouts. This was a little shakeout day right here, where it came down and it just came straight back up. But it's getting a little volatile. We don't like this volatility on this side. We always look for much less volatility. The company's just starting to make some money in 2024, estimated to make 9 cents. Maybe one reason why they haven't really done much in terms of their stock price. It's also an India-based provider of online travel services, so maybe they're trying to expand out, but it's been a little bit more, I'd say, of a niche market, and it's still a small cap at $3.5 billion. So we'll keep an eye on that one. It is acting pretty well. The next one is XLE. Now this is the whole energy ETF. And this one had a very nice breakout up in here. You can actually see it had been, this is really when the S&P started to break down, this one broke out. So really the money flowed into energy, back in January, I'm sorry. But you can see here we had a little pattern that formed and got really tight trading and with low volume. We'd love to see that, even though it was in this little base, and then it broke out on nice volume, and that was the beginning of a nice run. But like we saw with Devon, this really had a pretty steep 30% correction. It's trying to come back up to new highs. We had a little hit on Friday. So we're just watching this. Handle's still about 10%, so we're still okay there. And we'll continue to watch this. And we have a buy at about 85.20. Yeah, we're up here. We might actually change that. If it does kind of consolidate here, right at the tops of these little lines, you can see them right there. We might move that up. But for now, we're going to sort of keep it where it is and see if we can get an earlier entry if it warrants it. We have a couple more. NBIX, NBIX, and the company is called, let me see, NBIX. Neurocrine Biosciences, another biotech. Again, just like the other ones, it's been making its way up while the market's been coming down, so it's acting pretty strong. We're getting a little more volatility here, which we don't like. We had a shakeout here, came down and shot back up. We are getting the RS blue dot, which is showing the stocks making a new RS line, but while it's still in the base, or a new RS high. And it's looking pretty good. Really, we got a buy in at 108.50, right above this area here. Yeah, we're trying to clear this guy. This is 108.49, this little blue bar here. So a little bit early entry, but we're getting a little more. If it gets too much more volatility, we'll have to pull this one out. It was tightening up over here, and then it's just, you can see with the market volatility, the price has been kind of all over the place. So we'll be watching that one. And then our final stock is TAN, which is the solar ETF. Solar stocks have been really pretty strong, a few of them, especially Enphase. We've been watching that. Hasn't really been a clear way to get into that stock yet. But this is the whole ETF, which we sometimes like and prefer. You just get exposure to the whole sector, not just one or two stocks. And we're just now coming up. Here's the 200-day. You can see we were below it for a long time. We broke above it. Now we're starting to create our base here above that. We're also above the 50-day, which is the red line. So it's looking pretty good. Our buy zone is 88.45. I think we're going to be clearing. Yeah, we're looking to clear just this top right over here. We'll see what happens. But this is looking pretty good. Let's go back and look at a weekly. Yeah, we like the fact that this can make a nice move. It's kind of struggled recently, but we'll be keeping an eye on that. So that's really it. We really don't have any other stocks on our list. It's been kind of slim pickings, but we're always again looking for the strongest ones, and these. We'll see what happens. It looks like probably most of them, it's the market volatility, and the indexes are just, selling is coming in and it's holding down most of these stocks. But, one or more of these will probably end up being a nice market leader on the next bull market whenever that develops. Okay, well, that's it for this week. We'll be back next week. Okay.